Hi, welcome to Pauline Yong's channel. If you like our videos, please click the like and the subscribe buttons. Also, please comment below to submit your area of interest and we will cover for you. In this video, we are going to cover the utility sector and rank the sector stocks according to their market capitalization. There are four main categories under the utilities sector. The first is the electrical utilities and independent power producer. Electrical utilities and independent power producers or IPP own and operate power plants to generate the electricity to meet this demand from their customers. Bursa Malaysia companies that are involved in this category are TNB Tenaga Nasional Berhad, MFCB, Malakoff, Samaiden, and Eden. The second category is the water utilities. Water utility refers to the safe and timely distribution of water and other related services, such as wastewater treatment, to the industrial, agricultural, and residential sectors. Bursa Malaysia's stocks that are involved in these categories are Teleworks, Renthill, and Pba. The third category is the natural gas utility. Natural gas is burned to produce pressurized gas which spins the blades of a turbine connected to a generator. Inside the generator, magnet spins, causing the electrons in the wires to move, creating an electrical current, generating electricity. Bursa Malaysia companies that are involved in this category are Petronas Gas and Gas Malaysia. The fourth category is a multi-utility. Multi-utility relates to companies offering a wide range of services and products. In the business market, this type of service provision usually relates to energy, environmental services, waste issues, infrastructure, and telecom services. Bursa Malaysia companies related to these categories are YTL and YTL Power. We like the utilities sector because it offers stable, long-term investments with a regular and attractive dividend. It is also a resilient sector that can withstand times of economic downturns. Rank number 1 is none other than our Tenaga Nasional Berhad with a market capitalization of 55.3 billion ringgit. Tenaga Nasional Berhad operates an electricity utility in Malaysia. The company is engaged in the generation, transmission, distribution, and sales of electricity, and the provision of other related services. It operates approximately 6 thermal power stations and over 3 hydroelectric power generating schemes. Due to the Malaysian government-imposed Movement Control Order or MCO, TNB has registered lower electricity demand growth in the financial year 2020. In the first half of financial year 2020, TNB's electricity demand fell by 8.5% year-on-year. In the second quarter financial year 2020, TNB's electricity demand declined by 8.4% quarter-on-quarter. However, moving forward, we believe with the vaccination process beginning in the February of 2021, the demand for electricity consumption will be slowly normalized. We like TNB is because of its strong dividend yield of 9.5%. Except for 2020, we can see their dividend payout was on a rising trend. Currently, the price was trading at 9 ringgit and 71 cents as at February 5, 2021. Its PE ratio was 18.3, ROE 5.6%. Dividend yield was 9.5%. It has a cash reserve of 6.8 billion ringgit and its debt to equity ratio is 0.95. Rank number 2 is Petronas Gas Berhad with a market capitalization of 32.2 billion ringgit. Petronas Gas Berhad or PGB and its subsidiaries' major business activities are categorized into 4 segments: the gas processing, gas transportation, utilities, and regasification. Petronas Gas owns strategic gas infrastructure assets in Malaysia, namely the gas processing plants, the gas transmission network, and the gas regasification plants. These assets are monopolistic in nature, with important roles in the gas supply chain within Peninsular Malaysia. In addition, PGB also owns utility plants in supplying electricity, industrial gases, and steam to industrial users and national power grid. Given that PGB's businesses are monopolistic in nature, the earnings are protected under long-term contracts for gas processing with the Petronas and utilities with the industrial users and power grid, and newly implemented incentive-based regulation or IBR structure for gas transmission and regasification. PGB has a strong balance sheet with 1.4 billion ringgit net cash position, excluding 1.6 billion ringgit finance lease liabilities. PGB will continue to register approximately 2.2 billion ringgit free cash flow for the financial year 20 to 2022. Due to its stable revenue and cost structure basis, management is continuously reassessing the group's capital structure. In addition, Petronas Gas Berhad dividend payout has been on an increasing trend for the past 5 years, from 55% in the financial year 15 to 86% in the financial year 2019. Dividend yield is also on a rising trend from 3% in the 2015 to the current of 6%. Rank number 3 is YTL Power International Berhad, with a market capitalization of 5.4 billion ringgit. YTL Power International Berhad operates through 5 business segments: power generation, multi-utilities business, water and sewerage, mobile broadband network, and investment holding activities. Its power generation, merchant, multi-utilities, and power transmission businesses are carried out by its subsidiaries and associates in Malaysia, Singapore, Indonesia, Australia, and Jordan. Its water and sewerage operations are carried out by its subsidiary Wessex Water Limited in the United Kingdom. YTL Power plans to acquire a 396 megawatt combined cycle power plant and associated assets in Singapore for about 1 billion ringgit. According to the MIDF research, Singapore Power has been dragged by overcapacity since 2015, but the purchase triggers a much-needed consolidation in the sector. Combined with the Power Seraya, YTL Power would end up with a 19.6% capacity share from 15.6% currently, overtaking Senoko Energy as the second largest player in the Singapore power generation sector. As for the impact on its balance sheet, MIDF research believed that the acquisition has minimal impact on the YTL Power's balance sheet. Currently, the company was trading at 67 cents as at 5th of February 21. PE ratio was 73, ROE less than 1%. The company had a negative earnings for the first time in more than a decade due to the economic downturn. YTL Power registered a negative of 144 million ringgit for the fourth quarter financial year 2020, which represents more than 300% drop in the quarterly earnings. Rank number 4 is Malakoff Corporation Berhad, with a market capitalization of 4.5 billion ringgit. Malakoff Corporation Berhad is an independent power and water producer based in Asia. Its business includes power generation, water desalination, and operation and maintenance services. In Malaysia, it owns a generation capacity of approximately 5,346 megawatts, consisting of over 6 power stations. It provides project management services for in-house and external projects. The company, through its subsidiaries, is engaged in the design, construction, operation, and maintenance of a combined cycle power plant, generation and sale of electrical energy and generating capacity of the power plant. Among its power plants, Tanjung BIMB Energy Power Plant accounted for 29% of Malakoff's capacity payments in the first 9 months of the financial year 2020, while the Tanjung BIMB Power Plant accounted for 47.6%. In addition, Malakoff's Waste Management and Environment Division, Alam Flora's growth is expected to outperform, and it is forecasted that it will account for 19.4% of Malakoff's net profit in the financial year 21. On the other hand, Malakoff's dispatch of electricity to KENAGA National Berhad was affected by the MCO. In the second quarter financial year 2020, Malakoff's energy payments fell by 25.1% quarter-on-quarter due to the MCO. However, despite the drop in the energy segment, the group's bottom line was not severely affected in the second quarter of financial year 2020 due to higher earnings from its power purchase agreement or PPA and its new assets. We like Malakoff because of its strong fundamental. It was trading at 90 cents as at 5th of February 21, with a PE ratio of 12.7, ROE 6.5%, its profit margin 5.4%, price-to-book ratio of 0.7. It has a solid track record of dividend yield of 4 to 8% from the 2015 to 2020. Rank number 5 is Mega First Corporation Berhad, MFCB, with a market capitalization of 3.8 billion ringgit. According to the Public Bank research, MFCB first 9 months of the 2020 financial year core earnings surged threefold to 228.5 million ringgit, bolstered by strong earnings contributions from the power and packaging segments, while resources remained steady. The Don Sahong hydropower plant in Laos achieved 83.3% energy availability factor in the first 9 months of 2020 and is expected to hit more than 94% in the final quarter on the back of high water levels and absence of scheduled turbine maintenance. Moreover, under the 55-45 joint venture JV with Berkat Technology, the JV company, which is known as MFP Solar, has successfully backed more than 22 megawatt solar panel installation projects last year, and it targets another 25 megawatts in 2021. The installation works is expected to be completed by end 2021. Based on Public Bank research rough estimate, the solar panel business is expected to contribute at least 2% to group's revenue starting from financial year 2022. However, it is noted that the contribution to the bottom line is relatively small given its high earning base. We like MFCB as it has ventured into the renewable energy space and it has a solid fundamental. As at 5th of February, it was trading at 7 ringgit and 79 cents, PE 12.3, ROE 16.5%. It has the largest profit margin among the utility stocks, which is 41.6%. Its debt-to-equity ratio 0.36, and it has a cash reserve of 144 million ringgit. Rank number 6 is Gas Malaysia Berhad, with a market capitalization of 3.3 billion ringgit. Gas Malaysia Berhad provides natural gas and liquefied petroleum gas to homes, commercial businesses, and industries. Its energy solutions include power generation system with a heat recovery, such as combined heat and power, and alternative gas distribution, such as virtual pipeline. Its third quarter financial year 2020 reported earnings expanded by 14% quarter to quarter and increased by 9% year-on-year to 15.9 million ringgit. The strong earnings was mainly driven by the rubber gloves and the consumer products sectors. Overall, we like Malaysia Gas because the natural gas utility sector is very resilient, as can be seen from their quarterly earnings graph. Despite the pandemic, the annual revenue graph shows a steady rising trend. As at February 5th, the Gas Malaysia was trading at 2 ringgit and 59 cents with a P/E ratio of 16.5, ROE 19.9%, profit margin of 3%. It has a very steady stream of dividend income with 4% to 5% for the past 8 years since 2012. Rank number 7 is Teleworks Corporation with a market capitalization of 1.67 billion ringgit. Teleworks Corporation segments include water, waste management, construction, toll highways, and others. Its water segment is engaged in the management, operations, and maintenance of water treatment plants and water distribution systems. The company operates in 2 geographical areas, Malaysia and China. Teleworks has proposed to acquire the majority economic interest in 4 brownfield solar projects from Terraform Global effective 85% stake for an aggregate transaction sum of 144.1 million ringgit. According to AffinHwang's research, they believe the proposed total acquisition price of 180.4 million ringgit for a total of 100% stake is fair, close to their estimated discounting cash flow value of 181.2 million ringgit using weighted average cost of capital WACC of 7%. Teleworks will also acquire the solar operations and maintenance company under the deal and gain the expertise to bid for new solar projects. Although these assets incurred an aggregate net loss of 11.1 million ringgit in 2019, it was believed that there was a one-off impairment loss on receivables due from its holding company as part of their internal restructuring and interest payment on shareholders' loan. Hence, it is believed that acquisition 2021 PER of 8.6 times is attractive compared to the Malaysian listed solar companies' peer average of 22.4 times. Acquisition allows Teleworks to strategically maneuver into the renewable energy space. Along with the announcement, management has reiterated their confidence in maintaining an annual dividend per share of 6.6 cents. Currently, the company was trading at 83 cents as at 5th of February 21 with a PE ratio of 66.3, ROE 2.6%, profit margin of 7.2%. Its dividend was generous at 7.95%. It has low debt equity ratio of 0.49 and their cash reserves was at 68.8 million ringgit. Rank number 8 was Renthill Utilities Berhad with a market capitalization of 895.9 million ringgit. Renthill Utilities Berhad, formerly Renthill Holdings Berhad, is engaged in power and environment businesses. Company segments are environment, power and others. The environment sector provides water supply services and operates water and wastewater treatment plants. The company also provides specialized services in the management and optimization of water utility assets. In the power sector, the company owns and operates approximately two 190 megawatts combined cycle gas turbine power plants in Sabah. The company's operations and services are primarily in Malaysia, and its international operations are centered in Asian markets such as China and Thailand. On December 23rd, Renthill Utilities Berhad stated that its subsidiary, Renthill SAJ Sdn Berhad, received a 3-year extension from the National Water Services Commission (SPAN) to treat, distribute and supply treated water to consumers in Johor. The license commences on 1st of January 2021 until December 31st, 2023 and requires Renthill SAJ to treat and distribute 2.1 billion liters of water to consumers daily. Renthill reported a net profit of 15 million in the third quarter ended on September 30th, 2020, which brought to its 9 months earnings to 47 million ringgit. According to MIDF research, Renthill is well positioned as a proxy to water sewerage integration exercise given its strong track record in water supply operations locally and internationally. The research house believes that the asset-light model adopted in water supply industry has driven relative progress in improving operator sustainability and infra improvement. Overall, the earnings was consistent with quarterly earnings range between 368 million ringgit to 424 million ringgit from 2018 to 2020. Its annual revenue was quite consistent with an average of about 1.5 billion ringgit per year. As at 5th of February, the company was trading at 84 cents with a PE ratio of 12.7, ROE 11.9, profit margin 4.6%. It has a reasonable dividend yield of 3.6% and its cash reserves stood at 280 million ringgit. Rank number 9 is Mandan Group Berhad with a market capitalization of 407 million ringgit. Mandan Group Berhad is involved in engineering, procurement, construction and commissioning EPCC of solar, photovoltaic, PV systems and power plants. The company's other business activities include provision of renewable energy and environmental consulting services as well as operations and maintenance services. Its environmental consulting services include environmental assistance, waste management, energy efficiency and green services. It provides solutions to the residential, commercial and industries. Mandan Group, through its wholly owned subsidiary Mandan Sdn Berhad, has backed 25.8 million ringgit project from Gimzan Plywood Sdn Berhad to undertake EPCC works for a 2 megawatt biomass renewable energy power plant located in the Wakaf Tapai Industrial Area, Ulu Terengganu. The work has been scheduled to commence on the February 2, 2021 and has been targeted for completion within 23 months. In addition, Mandan Group has won the bid to develop a 1.2 megawatt biogas power plant in Pachok, Kelantan, its second power plant contract for the 9 months of November. Mandan said its 60% owned subsidiary, SC Green Solutions Sdn Berhad, had participated in the competitive bidding exercise for the project and submitted its bid to the Sustainable Energy Development Authority. As at 5th of February 2021, the company was trading at 1 ringgit and 94 cents with a PE ratio of 399, ROE 6.5%, profit margin of 9.09%. Despite the weak earnings, its debt-to-equity ratio was almost zero at 0.07%. Rank number 10 is Pba Holdings Berhad with a market capitalization of 288 million ringgit. From the period of 2019 to 2021, Pba is planning to invest a total of 501 million ringgit in water supply projects for the future. The three key projects are: Number 1, the third Butterworth to Penang Twin Submarine Pipeline Project. This project consists of 1,200 mm diameter twin submarine pipeline allows Pba to supply 350 million liters per day MLD of water from the Sungai Dua water treatment in Seberang Pride to Penang Island. The operation of Pba is different from other water utilities company. As Pba is owned by the state government, its objective is to mostly serve the people rather than the shareholders. For example, Penang's average domestic water tariff for the first 35,000 liters per month is the lowest in Malaysia, which was 32 cents per 1,000 liters, compared to the national average of 69 cents per 1,000 liters. As at February 5th, the company was trading at 87 cents with a PE ratio of 25, ROE 1.6%, profit margin of 3.4%. It has a steady dividend stream of 3.45% and almost zero debt of 0.05%. Its cash reserve stood at 122 million ringgit. Overall, we like the utility sector because of its resilient earnings profile thanks to the regulated assets returns for the KENAGA and gas-based players and the PPA-bound income for the IPPs. This also ensures sustainable dividends from the players at above average yields of 4 to 7%. The above analysis is for information purpose and we do not initiate a buy or a sell call. At the point of recording, we do not hold any of the stocks mentioned in this video. Thank you.